So if you know, the past couple of videos that I put out have been pretty intense emotionally, psychologically for trading, and this probably isn't going to be too much different, but at least it's a different side of it. So my past two videos were about me tilting on my funded account, and then my last one was about my first year of day trading. And today I want to talk about kind of how I've responded and what I would kind of break through, like my response and how I've been trading at least the past couple of days since those videos have posted. And I wanted to give a little bit of context, at least, to the structure that we've had lately. So if you've been trading at all, you're very aware of what's been happening these past couple of weeks. We've been on a huge bull run, and basically since October 27th, we put in that low down there. It's just kind of been a run up, a little bit of consolidation, another run up, consolidation for a day or two, run up, consolidation, run up, consolidation, run up, consolidation. So this is kind of a trend. Personally, I've been trading like absolute shit the past couple of weeks. So, you know, maybe I'm finding out exactly what kind of market I don't trade very well in, but we are right in the middle of this consolidation phase here. So I really wanted to talk about today and yesterday. Yesterday, I want to start with yesterday, and kind of the same things have happened, but to keep it short and sweet, I pretty much lost my confidence when it comes to like entering trades. You know, I'm still working on my just overall technical analysis and trying to figure out where it might go, and just, you know, watching the market. My analysis is like okay, but the confidence to actually get into a trade is just like it's gone on vacation, and I don't know how to get it back other than just sit here and just trust my analysis, get back into the trades. But this was yesterday, which was Monday, the 20th of November. And a couple of things. Again, we are still running up, right? So I'm keeping an eye on the open. I really like to keep an eye on the open to kind of dictate my trades for the day and see where it's going to go, how it's going to react to a couple of important key levels that I have. And so on this particular one, it ran up pretty big off of the open. I was waiting for some pullbacks. I didn't want to enter here. I just felt like that would have been jumping the gun a little bit. And I kind of let a couple of things play out, but this is where things got really interesting. So I took this this order block here. I drew like a pretty small 1 minute order block from that move up. Since we didn't play into it, I still wasn't too confident about making a move off of that just yet. But when it played back into it, a couple of things were really great here. I missed this entry long, and this was a confidence issue. I just didn't enter because I couldn't trust my process. And this is roughly what my process looked like. So a couple of things. We did have this 1 minute order block here that I knew at least was going to be somewhat significant off of the open. There was a fair value gap as well that was being played into this area. And the previous day's high of day all coincided with this level here. Now, that first attempt, I'm fine with that, right? I miss entries all the time, and sometimes if the price trades back into it, I'm willing to get back into it. But the issue was actually the fact that I missed the second entry. So really, this was my big concern, and a couple of things you can point out. So if we do the open here, if we do from the open, we draw a fib line up to the top there. This also would have been a pretty decent entry long, considering it almost came back to about 62% on the Fibonacci retracement. So again, this is just multiple things that lined up perfectly in this particular case. What I would have done, obviously in hindsight, I would have targeted probably the highs here, and put my stop loss probably below the order block. I'm assuming, I'm talking about this second entry here. Assuming I got in on this second entry, I would have put my stops below this low here, and then just let it run probably to the highs. Now, I miss entries a lot. Sometimes they're not perfect entries, and sometimes I'm a little too picky about my entries. But in this particular case, I think number one, the fact that we had a great reaction here, and then followed up by another opportunity to get long again. And what's really interesting here, you can draw these kind of like smaller dealing ranges that I like to do, at least with the Fibonacci retracement. So if I take the low of that swing low and go to this one right here, just this section right here, instead of this big move, this actually traded back down to about past 79% of this particular move here. So again, this would have been another pretty deep retracement here to go long again. So I'm upset, not that I missed one, but that I missed two potential entries on a long. Otherwise, I wasn't too happy about how it reacted the rest of the day. Right after that move, you know, it would have been a decent one, obviously, in hindsight, but it chopped afterwards, so really wasn't interested. And this was yesterday, but kind of wanted to go over today's, and we'll scoot over there. A couple of things that happened today, which I was pretty upset with. And not terrible. So today we basically sold right off of the open, and this was a similar thing. This was the day after, keep in mind, I still don't have the confidence back, but what I was looking at here was we had this bounce at around like 15,922. And after this sell-off, you know, I'm anticipating some sort of reaction here. So a couple of the notes that I had were that, and we can probably draw some Fibonacci retracements to keep things really interesting. So I'll draw from the bottom here to the top here. And my main concern was this entry. Let me move this entry. I'll zoom in a little bit. This entry here. So this Fibonacci is from this low to this immediate temporary short-term swing high. And this actually almost traded back to 62% of that move. And I had that drawn with a 1 minute, this little order block right here. And it perfectly reacted off of the order block. It perfectly reacted not perfectly reacted, it was close to the 62%. And in general, this was the other thing I wrote, but I also had this in discount versus premium, and it had dipped into the discount section here, which I've been pretty bad about buying in premium, and just really not good trade placement. Obviously, even after this trade that I got in, I would have gotten chopped around, but I wouldn't have gotten stopped out, which, you know, in hindsight would have been great. But again, missed entries are not the end of the world, so I can handle a missed entry. I mean, even here, this is where it started to get pretty bad. Between 10:57 right here on this bounce and 11:07, not only did I make a mistake, but I actually flipped my bias just within that 10-minute period. And instead, I was like, okay, we're not making moves, we're not continuing down, we're not continuing up. I took a short position. Now, I could tell you a bunch of different reasons why I justified this short position here. Well, I can tell you. I was looking at the market internals. Everything looked pretty bullish. There was I basically was continuing the move that we had. And if you zoom out, basically the entire overnight, just down, 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 down. And so I was thinking, you know, maybe this is, you know, we're going to continue. So that was my thought process. Long story short, I should have stuck with my original thesis, right? That this was going to be a decent long entry here, and I could have used any one of these wicks that kind of dipped back down into this 1 minute order block as an opportunity to do that. They were all in discount. They all had a 1 minute order block, and I had decent targets. Couple of things here. We had this entire section of untargeted area right here. So, I mean, let's say you draw a couple of order blocks. You know, these are really rough order blocks here. That being probably the closest one. That could have been a long-term profit target right there. Eventually it would have hit, which it would have been fantastic at 970 or around here, around 15,975. But also a couple of other ones. This isn't as clean, so I don't necessarily like this area, but you could have drawn probably a little bit of an order block here. So these could have been potential targets for me. So I had really clean trade location on the original thesis, right? The original long. But taking this short here, this is clearly just a lack of confidence and a lack of conviction which is understandable considering the past couple of days have been, or well, the past week or two have just been pretty brutal. There have been, I just can't trust anything right now. Like I've got a pretty decent understanding of the trades that I like to take. I have a pretty decent understanding of price reacting to certain order blocks. And so this would have worked out really in any capacity. Let's just say I got into a trade here and I wanted to target this first place. It would have worked out. I wouldn't have gotten stopped out with a stop here. I wouldn't have gotten stopped out here. And even the longer targets would have worked out. But at some point, I just, I don't know. It's you let the smallest things start to like throw you out of your confidence. And you know, I've sized down since this has happened, and so I'm trading micros now on my funded account just to kind of build back some confidence. And it's a slow process. You know, I'm taking smaller trades, but I still, right now, the issue's kind of switched. I'm starting to gain a little bit of my emotional stability back, which is good, but the confidence is what's lacking. So, you know, I start to question, and this is a perfect example. I question my original thesis, which if I had trusted my original thesis and then executed when was necessary, it would have been a basic trade. And on this particular one, I don't want to forget that this was an OB that I was watching, an order block that I was watching. And this, a couple of reactions here, that's why I wrote this in my notes. Reaction here, reaction here, reaction here. Again, that's why I stayed short. These are the reasons I stayed short, but I hate that this was the case. This was just not good trade planning, and it was going against really the whole thesis of the day. So I hate that that was, you know, on my mind, but I really just need to stick to my guns because I know long term I do have what it takes to do this, and I do have the right entry models. I do have the right ideas to be able to make these trades happen. So it's very, very interesting, you know, and I still am super excited about this process, but it's clear as day that there's definitely needs some confidence rebuilding to happen. And I'm excited to do it, but right now it's just going to be a slow process to get back to, you know, being able to trade. I like trading 1 to 2 NQ contracts, just full NQ contracts. Right now I'm in like the 3 to 4 micro range, so I've definitely significantly sized down, but that's just, again, getting my confidence back and trying to figure out how all of this stuff works, you know, absolutely crazy stuff. So otherwise, nothing fancy happened today. A lot of sideways movement, but this, again, along with yesterday, 2 back-to-back days of not trusting my original thesis. So it's in there, right? The original thesis, it's in there, it's operating, but that the ego part of self that says, oh, you know, you've messed up the past couple of weeks, like how can you trust your trade? I mean, you know, looking back in hindsight, I mean, that's why I'm making these videos, and these videos are for me. I think most importantly for me, but you know, I can't discount the fact that this may be helpful to other people. There may be people that are struggling with the same exact thing, this confidence building, but being able to go back and kind of recap on the fact that the decisions that you make, you can trust yourself. Like my original bias here and my original bias yesterday were both correct. And then everything afterwards is just either a bad trade or sets you in a bad mental state. And there needs to be some sense of, I don't know if I need to, you know, start meditating more frequently or whatever it is, but just start to reorganize the thoughts and say, hey, my instinct is right. That original instinct and original trade plans, they are working out, and they can work out. I mean, they've been proven. I've been funded. I've done really well on my funded accounts, and I just need to stick to it. And confidence, man, confidence. It is, you cannot trade without it. I mean, you've got to, these are, you know, split second trades, and you've got to be able to execute. So that's really it, guys. I appreciate you sticking around. If there's if you guys are learning anything or if this is valuable to you guys at all, I would really appreciate a like and subscribe. That at least lets me know that this is actually valuable to the people out there, because I'm just showing my trade reviews. Obviously I'm learning from this, but I if anybody else can benefit from this as well, just like and subscribe, and that'll let me know that this is going good. Otherwise, that's all I have for you guys. I'll see you guys next time. Peace.